Hello everyone, Will Hassel here once again for your weekend review and look ahead. Had some interesting moves in the market this week that I think a lot of us weren't really predicting. As always, I have up here my charts of the Dow Jones, S&P, and NASDAQ ETFs. Just kind of going through what happened this last week. On Thursday, we really started this kind of big, massive uptick, the first really big multi-day rise that we've had since this whole kind of month of January started. The U.S. basically came out and had, another GDP number about, I think it was like 3.2% again on Thursday, just kind of going and retracing that number that we had, as well as non-farm payrolls were out that day too. They were a little light. Seems everyone's been kind of getting into this whole blame the weather concept recently when it comes to poor economic data, especially when we start getting into the jobs numbers like we saw on Friday. Friday we did have a jobs number of, trying to find it here on Barron's. I know it definitely says that the jobs number was, the unemployment rate was down to 6.6%. If I remember right, I think it was around 130,000. Oh yeah, is it 113,000? I believe. Just looking over here. I know it was way down below expectations because people are starting to really get into this whole weather thing of, we can just kind of throw away these bad numbers that we're getting in the for jobs because it's bad weather, so we can just say, oh, once the weather turns nice, everyone's going to go back to work. I'm kind of in the speculative side when it comes to that because I think that's kind of a pretty bad reason to go and just say, oh, we're going to go and believe that these bad numbers are actually kind of good just because of the weather. I do realize that does affect it to some degree, but I don't think that traders should just think of it like that. But we did kind of it was a little less than expected, so we did kind of have this kind of little bump down we see in the Friday on Friday's day, and then we kind of went up basically on this whole weather, speculative. Everything's gonna be fine. It's just the weather type of a thing. So those were probably the two big economic events that happened last week that kind of drove us into this multi-day rally that we saw. Some interesting kind of mergers happened. Coca-Cola bought a big stake in around $1.3 billion in Green Mountain Coffee, and there's a lot of speculative assumptions. I'm kind of in this field of they're going to make a cold drink kind of thing, where kind of like a soda stream, but they can actually use the real Coke syrup and the Coke product syrups instead of the cola, air quotes around that syrup. And I have a soda stream. I like it, but it's gonna make things a little interesting. Green Mountain definitely took off on that. I think it was up 40%. If you traded Green Mountain, if you had a long position in Green Mountain, congratulations. I give you all the more power. I actually thought the earnings were going to be bad, and that I for one didn't see Coke coming in and taking a sizable stake in there. Getting on to what's going to be happening this next week in terms of economic data. I'm going to run through the economic data real fast and some earnings, and then I'll get to some of the kind of other events that will be happening. On Tuesday, we have December wholesale inventories. We're looking for a gain of 0.6% versus last period of 0.5%. On Thursday's always our big economic data events. We have January retail sales looking for 0.1%. Last period it was 0.2%. And December business inventories are looking for 0.4% versus 0.4% of last period. We also have jobless claims. That number, that release on that day, and then on Friday we have January import prices. We're expecting negative 0.1% versus flat of last period. January capacity utilization, we're looking for 79.3 versus 79.2. January industrial production, we're looking for 0.3% versus 0.3% of last period. And then finally we have the February Michigan sentiment. We're looking for 80.7 versus 81.2 of last period. The thing about the Michigan sentiment is we do sometimes see a little bit of a leak happen in some of these Michigan ISM type things. Sometimes in the Chicago numbers, sometimes you see those linked, especially the Michigan number, because high frequency hedge funds actually get the number ahead because it's not a government number, it's a independent organization number, so they can actually sell and release that info seconds ahead of time. So sometimes you do go and see, like if you follow Zero Hedge on Twitter or something like that, he'll go and say, rumors and stuff like that. Just kind of look in your Twitter feeds if you have Twitters or stock twits, and you'll see some kind of lenience toward there. And what I've learned is I watch the USD JPY pretty close, because you can often tell based on how that's kind of moving a little bit ahead of time what's going to happen. It kind of leads the way in a whole bunch of different numbers. Now, notable events happening. First, I'm going to go on Thursday. We have Janet Yellen repeats her testimony before the Senate Banking Committee. It's going to be interesting to go and kind of listen in on that, get some notes off of that, just to get a better feel for Janet Yellen, for those of you that haven't been around for that long, me included. Just so we can get to know Janet Yellen a little bit better. Bank of Korea announces decision on interest rates. This is going to be interesting, so we can go and see what's happening over there in Asia, get a better feel for what's been happening. The emerging market scares may come back into play. And then Thursday we have a slew of earnings. AIG, which I will be closely paying attention to because I am long that stock. BNP Paribas, Kraft Foods, Nestle, PepsiCo, and Rio Tinto are all releasing on that day, and that's a very heavy earnings day. And then on Wednesday, I kind of left this one for last because I think it's probably one of the more important ones, despite the U.S. data. I think this is the one that I'm going to be probably most paying attention to, and that is China reports January trade data. Now, because we've been seeing a large number of mixed PMIs from China, some of them have been down quite a bit from expectations, some of them have been right in expectations, some of them have just beaten just by a little tiny bit. It's going to be interesting to go and see what the trade data looks like, because so we just get a better feel of what's happening over there in the emerging markets, and especially China, because it is the world's second largest economy, and I think that will probably move markets on Thursday, even if we get very good job claims data. We will go and see, we could go and see the market reverse just because everyone's focused on China, and we could see those emerging market fears come back into play. And that's one of the reasons why I still have my HDGE hedge position on, even though I am kind of losing money on it and lost money on it this week because of Thursday and Friday. It's because I'm still kind of concerned about this emerging markets. We could see a very volatile year as the year kind of progresses. Going in for some of the stats of the markets, here's the Dow Jones. It finished above all of its major moving averages for the week, mainly due to that rally on Thursday. S&P, same there. It's below that 100, that 1800 level, which is kind of big when you talk about the S&P, because it's a major confidence number. Just kind of that psychological number. And then the NASDAQ, key for the NASDAQ has been, it did close above all of its simple moving averages. It's actually this Thursday and Friday were the two largest percentage gains back to back ever since December, which kind of gives you an input to just how rough January was when we look back. I mean, the NASDAQ hasn't had two back to back multi percentage move since December. Going off of that, going into some of my portfolio, JP Morgan, AIG, Visa to start off with. JP Morgan, haven't had a whole lot of news out of this other than that they are kind of behind the new GoPro IPO, so they're probably going to get some money off of that. It's a pretty great company. They're big into their action sports cameras, little kind of micro cameras. All the skateboarders, snowboarders, they use them at the X Games, but they're going to start using them at use them at the Olympics. Because they're pretty much indestructible. You can really go and mess with them, and they still stay solid. So yeah, probably going to see some good revenue come out of there because of the IPO. So they'll get some fees off of that. It did close below its 50 and 21 day moving averages. Not a huge deal though. It is above 55, which has been a little bit of a level to go and keep an eye on. Looking back at the 10-day, yeah, it's just been choppy, kind of like all the banks have been. Gonna go and give you a glimpse of Goldman. So we see here choppiness. Goldman, though, has been kind of the dog of the banking sector. Just not a whole lot of bullishness there. There's Morgan Stanley, Citigroup, which has starting to get to the $50 range back before its earnings mishap. Let's switch back to JP. Minimize that chart. AIG has been kind of creeping up as of late coming into earnings. I've heard a lot of talks about that they could do very well on earnings. It's getting back to this $49 level. 50 is a huge psychological number. I'm always talking about it on StockTwits. If it breaks 50, we could very well see it run up to 51 right before earnings, and really get into hopefully an earnings beat. I do have them down as let me find their earnings really fast because I've been able to find them for too long. They're just kind of gotten into the whole earnings releases of what the quarter might be. We're looking at 96 cents a share is the mean. The high is $1.13, and 83 cents is the low there. So yeah, hopefully they beat on there. I think they will because I haven't really heard a whole lot of bad news coming out of them in terms of earnings, and all the earnings estimates I've seen have all been pretty bullish. Getting into V. V has kind of recovered. MasterCard has had a rough time as of late, but V has been creeping up there. Once again, one of the resistance levels for V is this 232.23 line has really been a big bother for the stock as of late, and hopefully it gets back into there. That way we can go and get some momentum going. It did beat on earnings, as I mentioned last video, and I did take some off, but it did close above all of its simple moving averages, and it is a Dow component, so that's why I highlight it a whole lot, because you get some insight into the Dow. Moving into Starbucks, which actually got upgraded on Friday from Wells Fargo to a price target of, I believe it was 70. Here, I've got it right in front of me now. It was after they met with management. They got they upgraded it to market outperform. Let's see if I can actually find the price target on there. Going on StockTwits right now. I'm on my desktop computer looking at this. It has had quite the rebound when you look at it. compared to, yeah, it was just upgrade to outperform. They didn't really have a price target in mind. They just went to outperform instead of market perform after meeting with management. I have mentioned quite a bit that management is big with Starbucks. It's one of the big things about Starbucks that I really, really like. We're just coming back. I did mention this on StockTwits if you follow me and on Twitter, that we are coming back right almost to the level of that pre-earnings, just slightly above that pre-earnings price afterwards. If you would have bought it down here at 60, 68, 73, you would have had a nice little profit there. It bounced back. It actually kind of showed the market what to do before everyone else was kind of there with the nice bounce that it had right out of the lows. It kind of got to 68 and just bounced right back up, and it's just been taking off ever since. Love Starbucks. In fact, I have a nice ice cold venti iced red eye with me right now. But yeah, great company, great management. Wells Fargo, admits they have phenomenal management. So I've always been bullish in Starbucks. I did decrease my position because I was kind of getting concerned about it, but I did keep a small amount of shares just because I do like that they I had it there because I do believe in it long term, as opposed to the short term kind of mess. And then the highlight of my week, Micheal Kors. Oh my Lord, Micheal Kors. Phenomenal earnings. You talk about earnings. Just phenomenal. Knocked it out of the park. Had a 20% gain on that, on Micheal Kors. Just beat earnings out of the park completely. It had a total revenue of what is it? No, this is what they're expecting. Revenue was 101.01 billion, and that was up 59%. So, and it had a pre-share forecast of $845 million in revenue. So, net retail sales rose 51%. Same-store sales was increased 28%, and 98 net new store openings since the same period a year ago. You are talking about outstanding growth. Wholesale net sales soared 68%. North American same-store sales increased 24%, and Europe went and increased same-store sales 73%. You talk about growth, you have it here at Micheal Kors. Just phenomenal. Just phenomenal growth here. You cannot, I think Kramer, some people love him, some people hate him. I think he kind of got into the Kors bandwagon a little bit after they reported earnings. He said it's one of the best earnings that they've had so far this year, and I completely agree with him. You talk about growth. This is a growth monster. You can't find things that are growing this big right now. And let me tell you this, they haven't even touched Asia. They have absolutely no market share in Asia. When I was in Hawaii for the holidays, for Christmas, every Kors store that I went to, and there are plenty of Kors stores in Hawaii, let me tell you that. There's outlets, there's the big stores and all that stuff. All you could see was the visitors from Asia buying them out. They had to put a limit on how many bags and clothes that person could buy, because we saw someone who grabbed the same bag in 8 different colors because they're all bringing them home to their friends, because they cannot get Micheal Kors in Asia. They have to order it from European and U.S. Websites in order to get the bags. There are no stores in Asia, and we're talking about 5%, and they're starting to expand into menswear, which they haven't even touched. That's their new big thing. Menswear is 5% of their total revenue right now, only 5%, and that's just a microcosm of the company. They barely have anything else in menswear. I have some stuff that's mainly belts, some shirts, some jackets and stuff like that is what they sell. They're starting to make a huge push into menswear this year. I think once they get their menswear stable and out there, most likely we're going to be looking at about probably if it starts getting to 20% of their revenue, I think that's when you're going to start seeing them push into Asia and really start to expand. But yeah, we had this monster of a move from 76.62 up to 93. It was an incredible move. Here I have my gain loss out here right now. I did sell some, and I went and posted about that. Right now I have about 20% gains on Micheal Kors, and I even said when we look back onto up onto a 10-day chart, you can go and check this. When on Friday when it was down a whole lot, I did go and say, this looks like a great time to buy Micheal Kors. Load up before earnings because it's going to beat. I had the feeling it was going to beat just from what I saw when I was in Hawaii from all the girls at my school, wearing Micheal Kors and just seeing Micheal Kors more and more. And, hopefully some people paid attention to me saying that, because I would have made a lot of money. What even surprised me even more was it didn't even go down a whole lot. I think it opened at about 20%, and it was at 18% at the close. And then it kept moving higher throughout the week and ended up almost at $95. It's on a new 52-week high right now, and it's got nothing but good news coming out of Micheal Kors. I think it's going to be a monster for 2014. I think that's going to be about it, everyone. So remember, key things to look forward here are some of the economic data, but really kind of look for the China numbers that are coming out here, and try and see through the weather haze, as I'm calling it now, because weather can't be the main reason why these jobs numbers are coming in so poorly. We are coming out of QE, and that's causing some threats in emerging markets. Just, stay kind of loose. If you're a long-term investor, make sure you go into those growth names that are going to be there, 1 to 2 to 3 years out there. If you're more of a long-term investor, if you're a trader, stay loose. Stay in sync with the news. Try and get everything going. And I would also like to thank you for reading all my blog posts, watching all my videos, following me on Twitter, following me on StockTwits. Make sure to go to leadersinvestmentclub.com and look at some of the other posts by our Leaders members. Julian Marquez has a great story out called, let me go and find it right here. It was called To Buy or Not to Buy the Dip. Great story by Julian. Read that one. And then, of course, Ben Banks with his weekly, his week ahead outlines and setups. Great technician. I always talk about him. Absolutely phenomenal technician. I always talk to him whenever almost I'm going into every stock that I do. So please go and check them out. And thank you once again. And I will see you guys next week.